You know, the IRS and cryptocurrency, they have a very interesting relationship. Cryptocurrencies have gone mainstream. For example, you can, use Bitcoin to buy far more than you'd ever believe, especially nowadays. By the way, just try Googling what can I buy with Bitcoin. You'll get more than probably, I don't know, probably at least a million hits, right? By using cryptocurrencies, you have more federal income tax implications that you would ever believe. There are issues more and more. With the price of Bitcoin having gone through the roof, even though it might have pulled back a little bit now, with increasing acceptance of Bitcoin and other cryptocurrencies as forms of payment, the tax implications of using cryptocurrencies, it's a hot button issue now for the IRS, one to consider if you're an entrepreneur. Now, the 2020 version of the IRS form, what's called 1040, the form you have to file when you do your own personal taxes, asks whether you've received, sold, sent, exchanged, or otherwise acquired any time during the year any financial interest in any virtual currency or cryptocurrency. If you did, you're supposed to check the box yes. That's kind of important, by the way. Now, the fact that this question even appears on page 1 of 1040, right below the lines for supplying taxpayer information such as your name, address, it indicates really to me and hopefully to you, the IRS is getting at least a little bit serious about enforcing compliance with the applicable tax rules. So you've been warned by the IRS in effect. The 2020 Form 1040 instructions clarify that, virtual currency transactions for which you should check the box yes, but are not limited to, well, the receipt of transfer virtual currency, the exchange of virtual currency for goods and services, the sale of virtual currency, the exchange of virtual currency for any other property, so an exchange, and the disposition of a financial interest in virtual secured currency. Now, by the way, my name is Kenneth French. I'm with vastsolutionsgroup.com, where we do tax, finance, and artificial intelligence to lower tax liability for entrepreneurs. We've been in business for over 52 years, and really our end goal is to help lower tax liability for entrepreneurs on a tax-efficient and legal basis, taking into account all elements that are about abiding by a law-abiding citizen would try to take with respect to the IRS code, et cetera. Now, to arrive at the federal income tax results of cryptocurrency transaction, the first step is to calculate the fair market value, or FMV, measured in US dollars of the cryptocurrency on the date you receive it and on the date you use it to pay something. Very important. When you exchange cryptocurrency for other property, now let's include US dollars and different crypto services or whatever, you must recognize the taxable gain or loss just as you do when you make a stock sale in your taxable brokerage account. All very important. You'll have a taxable gain if the FMV of what you receive exceeds your basis in the crypto that you exchanged. You'll have a taxable loss if the FMV of what you receive is less than your basis in the cryptocurrency. Now, it's hard to imagine that cryptocurrency holding will be classified for federal income tax purposes as anything other than a capital asset, which is really important to think about, even if you use it to conduct business or personal transactions as opposed to holding it for an investment. Therefore, you got to think about the taxable gain or loss from exchanging your cryptocurrency. There'll be a short-term capital gain or a loss, or a long-term capital gain or loss, depending on how long you've held that cryptocurrency. Now, these are pretty important elements to think about when we're talking about cryptocurrency. Christine, I'm going to bring you up if you want to chat about cryptocurrency and the IRS. I'm just kind of going with the flow, kind of talking about the IRS and cryptocurrencies. So please feel free to come up if you're interested. Now, let's say you bought Bitcoin as an example in January, and let's just say it was $31,000. You have $24,000 taxable gain from appreciation in the value of the Bitcoin. Let's just say it's $55,000. So $31,000 subtracted from $55,000. The $24,000 gain is a short-term capital gain because you do not hold the Bitcoin for more than a year. So detailed records are essential for compliance, something to think about. Your records need to indicate the following. I'm going to remember, let's see if I can remember all this. the date you receive the cryptocurrency, so you have to have real clean records, the FMV on the date of the purchase, the FMV, again, fair market value, on the date you exchanged it for US dollars or whatever, and the cryptocurrency trading exchange that you use to determine the FMV. And finally, the purpose, your purpose specifically for holding the currency, if it's business investment or personal use, or even if it's in an entity, et cetera, et cetera. So just a few things to think about with respect to cryptocurrency and the IRS. Thank you for staying this long on this podcast called Vast Voices. And once again, my name is Kenner French. I run vastsolutionsgroup.com, where we do tax, finance, and artificial intelligence to lower tax liability for business owners. And you can do a little bit of research on me if you like. rkennerfrench.com. Again, go to rkennerfrench.com if you're interested in learning a little bit about me. And by the way, if you'll remember, I mentioned vastsolutionsgroup.com. And I also have a book coming out. It's going to be coming out in August called The Family Wealth Manifesto, that's based on a lot of research that we did with taxes with respect to Warren Buffett, the Oracle of Omaha, which I think will add value to a lot of business owners, and specifically family members of business owners, as we're trying to help lower tax liability for so many entrepreneurs, because it's such a struggle, especially in today's world where tax increases are potentially impacting us all. Once again, Kenner French, thank you very much for joining us with Vast Voices, where we talked about cryptocurrency and the IRS. Thank you, and I hope everyone has a great day.